Hello everyone. Today we are going to learn to use the stochastic indicator to detect oversold and overbought conditions and define a trade setup with entries and exits. On this chart we have the stochastic indicator with the default settings. We can see that it has two lines, the key and the D lines. The most important line is the key line, the red, this one. And as we can see, it uses to be over a certain level when market is going up or with a big slope to the upside, and below certain threshold when it is going down with a big slope also. One of the most used setups is sell the market when the key line is over the overbought level and buy when it is below the oversold. These dots are from the custom indicator reversal. It has the same settings than the stochastic. So let's review how to use the stochastic to create these signals. We have two ways to create a signal. One is using the second line, the D line. The D line is an average of the first line. As we can see, if we make the period smaller, each time both lines are similar. And using one of period, both lines are overlapped. A possible setup is looking for crossovers of both lines using a small period on the D line. So we have crossover down with a sell signal, crossover up with a buy signal. Here we have several crossovers. We only must take into account the sell signals because we are in the overbought area. And on the oversold area, here we have several crossovers. We only should take into account the buy signals. Another easier method is using only the key line. So we can hide the D line using the same period. And if we paint it in dots, then we can see the value for each bar. Each point is the stochastic value for each bar. On this setup, where we only use the key line, we are looking for the key line going down over the overbought. Here, for example, we have the key line over the overbought and going down. Same here. Both points, current and previous, are over the overbought. Same here. The overbought and oversold levels are 15 and 85 on this example. So we can configure the reversal indicator to detect and signal those levels. The reversal takes into account that both values are over the overbought. So we don't have a signal on this point because the first is over but the second is below. So if we want to trade this setup, selling overboughts and buying oversolds, we need to wait for the key line being over the overbought and then sloping down like here. On this point it is over the overbought and sloping down, so we have a signal. On this point we have two options. Instead of entering short, we can place a sell stop order below the low of the signal bar. At the following bar we update the order to be below an offset from the signal bar. As the market keeps going to the upside, we don't get a fill, so we don't get a loser. Here we have also a signal, so we place a sell stop. At the second bar we update the order and then we get a fill and a target. Here we have the key line going up and being below the oversold, so we have a signal. We can place a buy stop at an offset from the high of the signal bar. We update the order at the following bar. And then we get a fill and a target. Here we have an overbought, but the following point is below the overbought, so we don't have a signal. Here we have a possible loser if we enter the market, if we enter at market, and depending on the offset that we use, we can avoid this signal. If the offset where we place the buy stop is big enough, we can skip this losing trade. We have another signal with the buy stop, fill and target, and same here with the sell stop. So we have a setup composed by two things. One, detecting the overbought and oversold condition. The oversold is defined as, on this example, when the key line is over the overbought level. This level must be defined by us looking at the chart, and the key line starts sloping down and both points are over the overbought level. Here we have an option to enter at market or placing a sell stop below the signal bar, so we can avoid these kind of losers. This kind of orders is called RBO, reversal breakout order. So we are waiting after the reversal signal, a reversal bar confirming our signal. All this can be done with the reversal indicator. It also has the RBO entries we can enable, and using, on this example, an offset of 3 ticks. These arrows means that we have an RBO entry after this signal 3 ticks over the high of the signal bar. It also paints on real time the entry price that we can see now on a market replay example. I will download today's data and see. Now we are on market replay. trying to replay the last short trade. We are now entering the overbought area. We can make it paint on real time, the stochastic, so we can see the last finished bar and current stochastic value. When this slope is down and the current point is over the overbought, then we have a possible reversal signal. Here we can saw very fast, and now we have it again with a possible reversal dot and the possible entry price. It is confirmed once the bar is closed and shown in a different color, in light red. Another condition that is also taken into account is that to have a reversal signal we must be doing a higher high. This is another important condition. Now we have another possible short signal, possible reversal, and we can see the horizontal line with a possible entry price. We can trade that signal. I enable chart trader, select an ITM, and we can place a sell stop order
pending
over the horizontal line. Now the bar is closed, so the level is confirmed. We have the red dot on a confirmed reversal and the red horizontal line showing the entry price for that reversal signal. This order is not moving anymore because it is confirmed, so we can leave the sell stop order pending. So now the market can keep going up without giving us a fill, or reversing, confirming the trade setup and giving us a fill.
Order filled.
Now that we have a fill, the logical place for the stop is over the high of the move. We can add an offset and then locate the target or leave it as it is defined on the ATM.
Target filled.
This setup is very easy to implement using just the stochastic, and with the reversal indicator we can make it even better and find patterns on different time frames. For example, on Unirenko it is even easier to detect signals. I will remove all the markers, and we can see that not all the reversals are shown. We can see only some dots, but not all, and this is because the behavior of the stochastic. We can see the stochastic for this signal. We need this dot being below the oversold, and the value is 23. We are using a threshold of 20, so we need a bigger threshold. For the short signal, this dot is at 78. We are using a threshold of 80. Usually for this configuration, a threshold of 30 and 70 works very well, and we can see the signals that we get. As you remember, the signals are painted on real time, and on the price action bar. There is no repainting, so there is no way to miss a trade. We can get a very useful trade setup using just a simple stochastic and Renko bars. And also we are also shown the entry price. As I already explained it on previous videos, all these signals are compatible with the marker system, so we can automate not only this but any signal. There are a lot of videos on my YouTube channel. So we saw how to use the stochastic to create a very useful trade setup. Hope this has been useful for you, and if you have any question, please post below this video. Thank you everyone, and bye bye.